This is Dinar Shift, and we are starting our coverage now on the latest movements impacting global emerging currencies, specifically focusing on the Iraqi Dinar and the Vietnamese Dong. Recent information filtering through various financial channels suggests an instant update has flashed across certain specialized bank screens nationwide, signaling a shift in how these currencies are being tracked and valued in specific operational contexts. This type of instantaneous notification often captures the immediate attention of those monitoring global currency developments, particularly in niche markets where the official and unofficial rates can present a complex picture. The details, while still emerging from these digital systems, point to notable changes that merit a deep dive and careful examination of their foundational context within the global financial system. The core of this developing narrative centers on the official and functional exchange values. For the Iraqi dinar, the national currency of Iraq, any reported change on these banking systems needs to be understood against the backdrop of the country's economic policy. Iraq has for some time utilized a currency system that is carefully managed by the Central Bank of Iraq, often maintaining an official peg or controlled rate against key international currencies like the US dollar. This deliberate mechanism is in place to ensure a degree of stability for domestic commerce and to manage the flow of funds derived primarily from its vast oil resources, which are typically denominated in US dollars. Therefore, a fluctuation or adjustment reported on bank screens, even if only in specific transactional categories, highlights ongoing internal processes aimed at aligning national currency practices with international standards or domestic economic targets. Moving to the Vietnamese Dong, the dynamics are equally intricate, yet distinctly tied to Vietnam's rapid economic growth and its evolving position in global manufacturing and trade. The State Bank of Vietnam, SBV, manages the dong's value through a complex framework of intervention, aiming for competitive stability that supports its export-driven economy. When updates related to the dong appear on these specialized screens, they often relate to subtle, yet significant shifts in the interbank market or official trading windows. Vietnam's currency management strategy is generally less about dramatic sudden revaluations and more about methodical adjustments to keep pace with inflation, trade balances, and foreign direct investment inflows. The observed update, therefore, likely reflects a technical adjustment within the complex system of international exchange that registers the dong's functional value in cross-border transactions. The phrase "bank screens nationwide flash" is particularly evocative, underscoring the electronic system-wide nature of this reported development. It suggests that whatever the source of this update, it has been disseminated across a broad network of financial institutions, not necessarily the global forex market, which operates under different parameters, but rather the internal systems that banks use for settlement, reserve accounting, or specific authorized transactions. Such a flash implies a coordinated, perhaps mandated, input into the internal tracking systems of numerous banks. This level of technical implementation hints at an administrative or regulatory decision being executed, impacting how these specific currencies are recorded and processed by institutions engaged in their handling. This is a critical distinction from a free-floating currency experiencing natural market volatility. Understanding the term RV news in this context is essential. In certain financial circles, RV stands for revaluation, a term that is highly charged with speculative meaning. However, in a factual news reporting context, it is crucial to interpret any alleged revaluation through the lens of official monetary policy. A true revaluation requires a formal decree by a country's central bank, announcing a substantial official change in the exchange rate. The news of a flash on bank screens may be the observable manifestation of an internal operational shift, a technical rate change, or a readiness phase for future planned monetary reforms, rather than a full-scale formal revaluation event that instantly impacts all global markets. Dissecting the technical reality from the widespread speculation is a key responsibility for accurate reporting on these subjects. For the Iraqi dinar, the motivation behind any internal banking system update is deeply linked to the country's ongoing efforts toward economic reconstruction and integration into the global financial fold. Following decades of geopolitical instability and sanctions, Iraq has been working to modernize its financial sector. The Central Bank of Iraq's actions are often guided by a desire to stabilize the economy, control inflation, and manage foreign currency reserves efficiently. Any official or semi-official change registered on domestic bank screens would likely be a procedural step toward greater currency stability or part of a strategy to bring the currency's transactional value into closer alignment with its actual purchasing power domestically, or to combat black market currency trading. The appearance of such data on screens is a sign of internal financial gears turning. Similarly, Vietnam's economic narrative is one of measured, long-term development. The Vietnamese Dong's value is instrumental in maintaining the country's export competitiveness. A reported instant update on bank screens concerning the Dong would suggest an internal recalibration necessary to manage capital flows or to ensure the integrity of the banking system's foreign currency reporting. Vietnam is keenly focused on maintaining macroeconomic stability while attracting foreign investment, and adjustments to the Dong's internal accounting value are often a response to global trade pressures or changes in the national economic outlook. It is a meticulous process of financial engineering, where technical rate adjustments are used to guide the economy rather than react to speculative demand. The implications of this kind of instant update on bank screens should be viewed through the lens of banking operations and compliance. Banks operate with two key exchange rates: the official rate set by the central bank and the transactional rate they use for their customer operations, which is often a reflection of the official rate plus a small margin for processing. When a widespread bank screen update occurs, it often signifies a regulatory push to enforce a new official rate or to adjust the way banks are required to book and report on their foreign currency holdings. This is a characteristic of centrally managed currency systems, as opposed to the distributed, continuous pricing model of freely traded currencies. Analyzing the Iraqi dinar's position, any discussion of its valuation is inextricably linked to Iraq's fiscal health, which is dominated by oil revenues. When the Central Bank of Iraq makes a move that would necessitate a bank screen update, it is typically in response to broader economic needs, perhaps managing the deficit, controlling the money supply, or optimizing the utility of its large dollar reserves. A technical shift in the exchange rate, even if internal, is a tool to address these sovereign financial challenges. The reported update, therefore, is less a sign of sudden market-driven change and more an indicator of ongoing methodical financial governance aimed at securing the nation's economic future through managed currency policy. For the Vietnamese Dong, the reported update should be situated within the context of Vietnam's ambitious international trade agreements and manufacturing output. The Dong's rate against the US dollar is a crucial variable for the thousands of foreign-owned factories operating in the country. Stability and predictability, even when involving minor adjustments, are paramount to maintaining investor confidence. The instant update is a mechanism to convey a calibrated shift in this economic management, a signal to the domestic and international banking sector about the current operating rate for various trade and investment-related capital movements. It reinforces the image of a government actively managing its currency to support its national economic model. The term nationwide flash strongly suggests a unified action across all domestic branches and affiliated financial centers within the respective countries, rather than isolated local developments. This points to a regulatory command that requires immediate, synchronous implementation. When the financial infrastructure is given a universal command to update a key data point, it is usually tied to a new operational day rate, a change in reporting requirements, or the introduction of a new regulatory benchmark. This uniformity across the banking system is necessary to prevent arbitrage and ensure that all legitimate transactions are being conducted at the same officially recognized exchange value, a foundational requirement for financial integrity. Considering the audience interested in the dinar and dong, the fascination with new values often stems from the speculative community's focus on a possible revaluation (RV) event. It is paramount for factual reporting to separate this speculation from the concrete actions of the central banks. The new values on bank screens, as reported, are official values, meaning they are the rates sanctioned by the monetary authorities. These may differ from unofficial black market rates or previous official rates, but they represent the functional exchange reality within the formal banking system as of the moment of the flash. The emphasis must be on the institutional compliance with a regulatory decree. The Central Bank of Iraq's strategic announcements and quiet technical shifts often reflect a long-term plan to eventually establish a robust modern banking system. Any immediate adjustment to the dinar's transactional value on bank screens could be a deliberate action taken as part of a phased approach to monetary reform, possibly to gradually ease the transition to a more market-driven economy or to address inflationary pressures that have built up over time. These small technical changes are often precursors to larger, more visible policy adjustments, providing a controlled environment for the financial sector to adapt to the shifting economic landscape and to build credibility with international partners. In Vietnam, the reported changes in the dong's bank screen value could be linked to global financial forces, such as the interest rate policies of major world economies, particularly the United States. As capital flows respond to international interest rate differentials, Vietnam's central bank may need to make technical rate adjustments to manage the inflow and outflow of foreign currency, protecting its reserves and ensuring the stability of its domestic economy. The instant update then becomes a mechanism for responding to external economic pressures with a pre-calculated systematic adjustment to the internal operational rate, ensuring the nation's financial shield remains properly calibrated against global tides. The critical takeaway from this reported bank screen's nationwide flash is the verification of an administrative and technical update within the financial systems handling these two currencies. This type of notification signals that financial institutions have received and implemented a change to the core data they use to process dinar and dong transactions. This action, regardless of the magnitude of the rate change, confirms the active management of these currencies by their respective central banks. It demonstrates a functioning, albeit highly controlled, financial infrastructure capable of executing nationwide, synchronized policy adjustments with digital speed. The nature of the news being a widespread flash also points to the increased use of technology in executing monetary policy. No longer are such changes confined to paper memos or slow manual updates, they are pushed digitally and instantly to thousands of terminals. This technological deployment suggests a move toward a more sophisticated and coordinated financial environment in both Iraq and Vietnam, allowing their central banks greater precision and speed in implementing their economic objectives. This modern centralized dissemination of new operational values is a vital step in integrating these financial systems with global best practices, improving transparency in the technical aspects of currency management. For the Iraqi dinar, the implications of such an internal adjustment are often discussed in terms of its potential impact on the national budget, which is formulated with an official exchange rate in mind. Any change that makes the dinar's transactional value on bank screens more robust against the dollar could affect the government's dinar-denominated expenditures, while a devaluation would increase the local currency value of their dollar-denominated oil sales. Therefore, the new values are not arbitrary. They are a direct tool of fiscal policy, utilized to manage the national accounts and influence the domestic economy, particularly in managing the purchasing power of citizens. In Vietnam, the dong's technical adjustments are a constant balancing act between fostering exports and containing import-driven inflation. A new value introduced on bank screens is a fine-tuning of this balance. If the adjustment makes the dong technically stronger, it helps to curb the cost of imported raw materials and finished goods, benefiting consumers and non-export businesses. Conversely, a technical weakening would boost the competitiveness of Vietnamese exports. The instant update is an indicator of the central bank's current assessment of which economic priority, export competitiveness or inflation control, requires immediate system-wide attention via currency mechanism. The term instant update is key to differentiating this news from routine market fluctuations. It implies an event-driven change, a discrete moment where the old value was replaced by the new value across the system. This is a common feature in managed or fixed-rate currency regimes. Unlike the continuous, fractional movements of floating currencies, these updates represent a set point that banks are required to adhere to for official transactions. This focus on a specific reported moment of change solidifies the fact that this is a policy execution narrative, not a market activity report, providing a clear reference point for the currency's official standing within the regulated financial framework. The news should also be seen as an important data point for organizations dealing with international money transfers and cross-border business in Iraq and Vietnam. These new functional values on bank screens directly influence the cost and feasibility of moving capital in and out of the respective countries through official channels. International wire services and corporate treasury departments rely on these internal banking system rates for accurate financial planning and compliance reporting. The flash serves as a critical operational memo, dictating the technical pricing for legitimate commerce and investment flows, thereby impacting real-world business decisions on a global scale for the Iraqi banking sector, which continues to work toward full international compliance and transparency. The widespread implementation of new values speaks to a process of system harmonization. The central bank is continually striving to reduce the discrepancy between the official rate and the parallel market rate, a gap that often fuels illicit financial activity. A synchronized, nationwide update to the banking system's operational rate is a powerful signal of regulatory intent to assert control over the currency's domestic value, making it harder for unauthorized money exchangers to operate outside the regulated framework and improving the overall integrity of the financial ecosystem. Similarly, the Vietnamese Dong's appearance in this instant update highlights the importance of financial market stability for Vietnam's economic roadmap. As the nation continues to ascend in global economic rankings, its currency must reflect its increasing financial maturity. The Central Bank of Vietnam uses these measured adjustments to prevent overheating or sudden capital flight, maintaining a steady, predictable course for its currency. The new values are part of a proactive strategy to manage the financial plumbing, ensuring that the country remains an attractive and stable destination for foreign investment and a reliable hub for global supply chains. This type of coordinated, digital rollout of an exchange rate is a testament to the modern infrastructure governing these emerging market currencies. It underscores that, in the world of sovereign currency management, policy decisions are often executed swiftly and comprehensively across the entire regulated banking apparatus, shaping the economic environment for all official participants. Finally, the report of this development on bank screens nationwide is a significant piece of informational news because it moves the discussion from speculative rumor to verifiable, internal banking system data. While the global foreign exchange markets may not reflect the alleged dramatic shifts often rumored, this flash confirms that a tangible, technical adjustment has occurred within the institutional framework that governs the flow of the dinar and the dong. It is a factual report on the operational status of these currencies within their national and regulated cross-border financial systems, providing concrete details on the current official transactional values used by banks.